All right, let's plunge into the luxurious world of Singapore real estate. Ready for a deep dive into the core central region property market?
Always ready.
Awesome. You sent over a report breaking down transactions through, let me see, the first 11 months of 2024. And wow, just glancing at it, it's clear there's a story behind these numbers.
Oh, absolutely. Like an
Yeah.
iceberg. The numbers themselves are impressive, but the real story lies beneath the surface. The buyer motivations, the emerging trends, that's where it gets fascinating.
Exactly. Our mission is to decode that story. So we're not just crunching numbers, we're trying to figure out what they tell us about this exclusive market's future. And I think a great place to start is, well, honestly, something that surprised me. The amount of resale and subsale activity in 2024, it's huge.
Yeah, it's pretty remarkable. The report actually shows a 14.4% year-on-year increase for resale units
Wow.
and subsales. Even bigger jump, a 59.4% increase. And all this happening while we're seeing fewer new launches this year.
So why are existing properties suddenly more popular than brand new ones? Is this a temporary thing or something bigger going on?
Probably a bunch of factors, to be honest. I
Mhm.
mean, think about it. 2024 has been a wild ride globally. Economic uncertainty everywhere. People are looking for, well, certainty, something tangible.
Something they can like touch and see and move into right away. Makes sense.
Exactly. It's that I know what I'm getting feeling. Now, speaking of knowing what you're getting, let's look at the projects that performed really well. For new sales, the collective at One Sophia is leading the pack. Sold about 62 units, with a median price around $2,732 per square foot.
That's got to be some kind of sweet spot. To attract buyers in, well, this market, what's their secret sauce?
A perfect blend of location and pricing, I'd say. Prime spot, competitive prices. It's a winning formula, especially in the CCR.
Right, even for luxury buyers, value matters.
Who doesn't love a good deal, right?
Yeah.
What about other standout new sales? Anything catching your eye?
19 Nassim did incredibly well, sold 52 units, but at a higher price point, around $3,386 per square foot. Ah, so a different story then.
You got it. 19 Nessine is all about prestige. District 10 address, that alone adds a premium. Attracts buyers who value exclusivity.
It always comes back to location, doesn't it? Even in a market as, sophisticated as this one?
Location is king. And rounding out the top three is One Burnham, 51 units sold, median price around $2,737 per square foot.
Now, this one is part of an integrated development, right? Could you explain what that means for listeners who might not be familiar with the term?
Sure, so think of it like a mini city. It combines residential, commercial, and lifestyle all in one place.
Convenient.
Extremely. Big draw for busy people who want everything right there. Okay, let's move over to the resale market stars.
Uh-huh.
Cascade and Reserve is at the top, sold an impressive 147 units with a median price of $3,014 per square foot.
District 10 again. It's hot. But it's also a completed development, right?
Yep, move in ready. In this climate, that's a big plus. Less risk. Instant gratification. Then you have the residences at W Singapore Sentosa Cove, sold 81 units at a median price of $8,802 per square foot.
Sentosa Cove? Ah, waterfront luxury. That's a whole different vibe. What kind of buyer is drawn to that lifestyle?
I'd say it's about exclusivity and resort-style living. An escape, but still in the city. For people who, well, want a taste of paradise.
Mm.
And then there's Deleton, not a new kid on the block, but still sold 65 units at a median price of $1,982 per square foot. What do you think that is?
Well, it's not brand new, so maybe it's got that established appeal.
Exactly. Deleton has amazing amenities, a great community vibe, perfect for buyers who want a secure, comfortable lifestyle.
So location and value are crucial, both for new sales and resales. Okay, let's talk about the really exciting part, the $1 million deals. This is where we see the upper echelon of the CCR.
The cream of the crop.
Exactly. So there's a sale at Skywaters Residences. Are you ready for this? $47.3 million. I know. The unit was like 7,761 square feet, so that's about $6,100 per square foot. What makes someone spend that much on a property?
Think of it as a statement. These buyers want unparalleled luxury. Unique features, private lifts, huge balconies, incredible views. It's more than a home, it's a lifestyle. Then you have the 32 Gilstead. They had multiple transactions, all between 14.4 and 14.7 million. What makes this development stand out?
Well, it's in a prime location, and the units are huge.
Exactly. People are willing to pay top dollar for space and privacy. It's a rare combination, especially in the CCR. Now, on the resale side, two adjacent units at the Ritz-Carlton Residences, Karen Hill, both sold for $16.5 million, around $5,397 per square foot.
That branded residence tag seems to really matter, huh?
Absolutely. It's about the level of service and amenities they offer. Think five-star hotel living, but it's your home.
So it's a premium experience, and people are willing to pay for that premium.
Absolutely. Then you have Nassim Park Residences, a unit sold for $14.2 million at $4,472 per square foot. Again, prime location, incredible value.
It seems like these prestigious addresses, they really hold their value, even with all the global uncertainties.
They do. It's about more than just bricks and mortar. It's about a lifestyle, a community, and an investment that's likely to appreciate over time. Okay, so we've talked about local demand, but what about, well, the elephant in the room? Foreign buyers.
Right. There's still a big part of the CCR market, even with the higher ABSD rates.
Exactly. The report shows they're not shying away. And get this, the top foreign buyers are from the U.S.
Really? I wouldn't have guessed that. Why the surge in American interest?
It all boils down to the Singapore-USA Free Trade Agreement.
Yeah.
U.S. buyers don't have to pay the ABSD. That's a huge incentive.
So we have both local and international buyers driving the market. It's a global melting pot. But what about the future? The report hints at a possible rebound for the CCR in 2025, fueled by new projects coming online. What's the scoop?
The pipeline is looking a lot stronger compared to this year, and there are some exciting developments in the works.
Like Marina View Residences and Oria, what makes those stand out?
Marina View Residences is all about location, right in the heart of the downtown core. 683 units planned for people who want to be in the thick of things. And Oria, that's the transformed Golden Mile complex, a blend of heritage and contemporary design.
That's a fascinating one, repurposing an iconic landmark.
Exactly. Plus, it's in District 7, super accessible.
Yeah.
So, yeah, two very different projects, but both likely to be very popular.
Okay, so new launches coming, potentially shaking things up a bit. Think we'll see a big shift in buyer preferences or prices.
It's possible. New launches often offer tempting prices and incentives, but, well, the economic climate is still a big question mark. It's hard to say for sure.
It's a constantly evolving game, isn't it? Okay, you know what? Before we dive into the expert opinions you've gathered, let's recap what we've learned so far.
Mhm.
So we've seen a surge in resales and subsales, probably driven by economic uncertainty and maybe a new generation of buyers coming in with different needs.
Right, and we've seen that luxury and exclusivity are still huge in the CCR. Those million-dollar deals are proof of that.
Absolutely. So when we come back, we'll unpack those expert perspectives. Stay tuned. All right, so we've got these expert opinions to unpack. It's like getting a sneak peek into the minds of the people shaping the market. What kind of insights are we talking about here? Who are these experts, and what are they saying about the future of luxury real estate in Singapore?
Well, we've got a real mix, analysts, consultants, even a few developers. And it's interesting, there's a lot of optimism about the CCR's long-term prospects.
Yeah, not surprising given everything we've discussed, but what are they basing this optimism on? What specific factors do they think will drive this growth?
They're highlighting a few key themes. First, Singapore's, well, its economic and political stability. That's a huge draw for investors.
Right, makes sense. It's a safe haven in a world that feels pretty unpredictable right now.
Exactly. And it's not just about, preserving wealth, it's about growing it. The government is really focused on enhancing Singapore's position globally as a business and financial hub. So that attracts a lot of, well, high net worth individuals, and they need places to live, right?
Of course. So more demand for luxury properties. It's a cycle, isn't it?
It is. And then there's the issue of supply, or rather the lack of it. There's limited land available in the CCR.
Yeah, and that's reflected in the prices we're seeing.
Right. High demand, limited supply, basic economics. And the government is being very careful about releasing more land for development, trying to find that balance between growth and sustainability.
So they're preventing a glut of new properties, which keeps the CCR exclusive, which maintains its appeal. It's a delicate balancing act.
It is. Okay, this brings us to another point. The profile of the luxury buyer is changing.
Oh, interesting. So, we think of luxury buyers as, well, older, established families, that sort of thing. But you're saying that's changing.
It is. We're seeing a lot more younger buyers, tech entrepreneurs, people inheriting family businesses, affluent millennials.
So it's like the whole idea of luxury is evolving.
Exactly. It's not just about, old money and huge mansions anymore. These new buyers have different priorities.
Hmm.
They want properties that reflect their lifestyle.
So are they looking for different kinds of properties? Are they changing the market?
Oh, absolutely. For one thing, Even though it's luxury, they're often looking for smaller, more manageable units. High-end condos with all the bells and whistles, but not necessarily huge square footage.
Makes sense,
You know,
especially if you're, a busy professional.
right. Location is still key, of
Mhm.
course. They're willing to pay a premium for that. And amenities are really important.
So it's not just about the property, it's about the lifestyle it offers.
Exactly. Oh, and another thing, sustainability and wellness. That's a big focus for these buyers.
Yeah, that's a trend we're seeing everywhere.
It is. These buyers want eco-friendly features, energy efficiency. They want green spaces, things that, well, that support their well-being. Okay, let's talk about investment now. The experts are pretty optimistic about the long-term value of Singapore's luxury property market.
That's no surprise, but what are they specifically saying?
Well, Singapore has a great track record of capital preservation. The market here has been pretty resilient, even during tough times.
So it's a safe bet for investors.
It is. And you combine that with the limited supply we talked about and the constant influx of high net worth individuals, well, the experts believe that prices will keep going up.
Okay, so stability, scarcity, and strong demand, that's a pretty powerful combination.
It is. But it's important to be realistic. No market is perfect, right? The experts did point to some potential challenges.
Oh, like what?
Well, the government is trying to cool the market a bit with those measures like the ABSD.
Right, right. But they're not trying to crash the market, just moderate it a bit.
Exactly. And then there's the global interest rate situation. Rates are going up everywhere, and that can affect, well, everything.
Makes mortgages more expensive, could cool buyer demand.
It could, but Singapore's financial system is very strong, so the risks are, well, they're manageable.
Hmm.
Okay, one more thing I wanted to ask about. Technology. How do the experts see that playing out?
Yeah, good point. It's changing everything, isn't it?
It is. And the experts are saying that technology is definitely impacting the luxury market too.
I've seen some amazing things, virtual tours, online platforms, even developers using AI for property evaluations.
Right. And in the luxury market, technology is all about enhancing the buyer experience.
Like smart home features, personalized concierge services. I've even seen some developers using augmented reality. It's amazing.
It is, and they're using data analytics to understand buyer preferences. It's all about making the experience, well, more tailored and seamless.
Yeah.
Oh, and another interesting thing, the experts are seeing a lot more interest in alternative investment models, things like fractional ownership and REITs.
Yeah, those are really interesting. It's like democratizing access to luxury real estate.
Exactly. You don't have to buy a whole unit. So, yeah, lots of factors at play here. Economic stability, limited supply, changing buyer preferences, and then you have technology and new investment models. It's a dynamic landscape. But how does all this connect to the market outlook report?
Yeah, let's bring it all together. What does this all mean for our listeners?
Great question. Let's do that. Let's connect those dots in the final part of our deep dive.
All right, so we've explored the data, heard from the experts. Time to synthesize, right? What's the big picture when it comes to Singapore's core central region luxury property market?
Let's tie it all together. The data, those big trends we talked about.
Yeah, and those fascinating expert opinions. One thing that really stands out to me is, well, the resale and subsale market in 2024. Both the report and the experts highlighted its strength.
It's a pretty clear trend. Remember, the report showed a surge in these transactions, and, well, the experts backed that up. They talked about economic uncertainty making buyers favor, completed move-in ready properties.
Makes sense. Certainty in uncertain times.
Exactly. And remember those top-performing projects, Cuscat and Reserve, Leeton Green,
Hmm.
all resales or subsales. It's a clear shift in what buyers want.
Tangible value. Instant gratification. Who wants to wait around these days?
Right. And this ties in with, well, what we were talking about with the changing luxury buyer. Younger buyers looking for smaller, more manageable units, often in prime locations. That's exactly what a lot of existing developments offer.
So it's a convergence of factors. Economic conditions pushing buyers one way, and a new generation of buyers, well, their preferences just happen to align perfectly with what's available.
It's fascinating, isn't it?
Hmm.
Now, another point of agreement, the enduring allure of luxury in the CCR, those million-dollar deals, remember, that $47.3 million sale at Skywater's Residences.
Or unforgettable.
It shows just how strong the demand is for ultra-luxury homes, especially in prime locations.
And the experts emphasize that, right? That this demand isn't going anywhere. Strong economy, political stability, limited land.
All those factors contribute to the CCR's, well, its desirability.
Mm.
And that, in turn, just makes it even more exclusive.
It's a cycle. Okay, let's not forget the international aspect. The report highlighted the presence of foreign buyers, even with the higher ABSD rates.
Right. And remember, the top foreign buyers, Americans.
Yeah, that was a surprise.
But it makes sense when you consider the Singapore-USA Free Trade Agreement. No ABSD for them.
Right, a huge incentive. Okay, so both local and international buyers are playing a role. It's a global market. What about the future?
Well, the report predicted a rebound in 2025, driven by those new project launches. We talked about Marina View Residences and ARIA,
Two very different developments, but both very exciting.
and they illustrate what the experts were saying about, the changing preferences of luxury buyers. Both Marina View Residences and ARIA offer something unique. They cater to that desire for prime location, convenience, modern design.
Marina View Residences, right in the heart of the downtown core, perfect for those who want to be in the thick of it all. And Aurea, that blend of heritage and contemporary design, that's appealing in a different way. It's about history, culture, a sense of place.
Exactly. So 2025 is shaping up to be an interesting year for the CCR. A mix of existing trends and, well, these new developments. It's going to be fascinating to see how it all plays out. But, and this is important, the future isn't predetermined.
Right, it's influenced by so many things.
Exactly. We've explored the data, the trends, the expert opinions, but ultimately it's up to each individual buyer, each investor, to make their own decisions.
So, to our listener, we've given you the information. Now it's time to connect the dots, draw your own conclusions. Think about it. New launches, global economic shifts, changing buyer preferences. How do you think the CCR luxury property market will evolve?
What trends will gain momentum? What challenges might pop up? These are the questions we want you to think about as you continue to explore this market.
And on that note, our deep dive into the world of Singapore's core central region luxury property market comes to an end.
We've journeyed through the numbers, the trends, those insightful expert opinions. Now it's your turn to continue the exploration.
Remember, knowledge is power. Take these insights, use them to inform your own understanding of this dynamic and, well, honestly, really exciting market.
Until next time, happy exploring.